ये कितना है? ये कितना है?
हेलो, हरिओम मेडिके मुझे नाम सी ए भाविक मेडिके हरिओम।
ये कितना है? हेलो।
Due to some technical difficulty, we are trying to resolve it. ત્યાર સુધી 5-2 મિનિટ એલા કરે ખાલી જો ડીલે है ટેકનિકલ ડિફિકલ્ટી રિઝોલ્વ કरूंगा। थैंक यू। हरिओम मेडिके आज जो प्रोग्राम चालू करी वो मुझे नाम सी ए भाविक भानुशाली है અને શ્રી ભાનુશાલી કચ્છી સેવા સમાજ ટ્રસ્ટ દ્વારા પ્રેરિત ભાનુશાલી ચાર્ટર્ડ અકાઉન્ટન્ટ ફોરમ जो ही नेविगेटिंग टैक्स ऑडिट्स जो सेमिनार अज पांचे विच में स्पीकर आई सीए योगेश अमल माना पंजाब भानुशाली ही इज अ पार्टनर एट जीबीसीए एंड एसोसिएट्स एलएलपी અને મોડરેટર તરીકે સીએ ઉર્મી જગદીશ જોઈશર અહીં शी इज अ असिस्टेंट मैनेजर एट डेलॉइट and also author of various SFM books for a leading coaching agency. So before I hand over mic to CA Yogesh Amalji and CA Urmi, just a brief introduction about BCAF અને BCAF કોરો હોય અને પાંજે ભાનુશાલી CA લા કરે કેડા કેડા પ્રોગ્રામ ના કોર કરે તો ભાનુશાલી ચાર્ટર્ડ અકાઉન્ટન્ટ ફોરમ हिंजी स्थापना किंक 12 वरे पहला 2015 सॉरी 2015 में थी है અને એ पांजा 12 થી 13 सीए जिनके एडिते समझ में आवी कि पांजे भानुशाली सीए ला करे कि फोरम एकड़ो प्लेटफॉर्म होणो खपे जिते ही पंहिंजा व्यूज व्यक्त कर सके पंहिंजा की पण क्वेरीज અને डिफिकल्टी जो अचे थी रियल प्रैक्टिस करे में वेदर दे आर इन प्रैक्टिस और वेदर दे आर इन इंडस्ट्री ये रिजोल्व करे सके हिन ला करे फोरम जी स्थापना थी। इन फोरम जा फाउंडिंग मेंबर्स अगर मुझे नाम गिनना हुए तो योगेश भाई जो आज स्पीकर हैं, संजय भाई, कमलेश दामा, संजय गजरा, योगेश अमल, मीरा जोईसर અને ઘણે આજ કોલ તે પણ અહીં હિતેશ ચાંદ્રા અને આના ગચ્છ મેળે मनोज दामा तो ही स्थापना क्यों ने असी मेरे यंग सीएस के प्रेरित क्यों कि आई हन फोरम ते अचो ने अना इग्या हन जी यू बिकम द टॉर्च बेरर्स। तो ही हिकिड़ो शॉर्ट हो BCF जे बारे में। BCF जो फाउंडेशन डे 15 अगस्त जो है, तो पाण हर वरे 15 अगस्त जो BCF जो फाउंडेशन डे बनायूं था। अने ही हेर 9th फाउंडेशन डे पाण बनाया BCF जो, विच वॉज ऑन 25th ऑफ अगस्त बनाए में आयो। अने इन जो वेन्यू हो पंहिंजो भानुशाली वाड़ी हो। हिते 21 चार्टर्ड अकाउंटेंट्स के सम्मानित करे में आयो, फेलिसिटेट करे में आयो। उन्हीं जे एग्जाम्पलरी परफॉर्मेंस ला करे अने CA पास करे ला करे। हिनमें बो रैंक होल्डर पण हुआ जो CA इंटर में रैंक होल्ड कयो हो, भव्य अने ॿिया मूंखे नमन कटरमल। सो भव्य अने नमन कटरमल हिनी के सम्मानित करे में आयो जो इंटर में ऑल इंडिया रैंक खणी आया हुआ पंहिंजे समाज में। तो पंहिंजे समाज में हिन बाबत में जो अवेयरनेस फैलायला करे अने अना भानुशाली CA बने, लॉयर बने, CS बने, ही पंहिंजी प्रार्थना है। अने हिन नोट ते आऊं मुझो वक्तव्य के पूर्ण विराम लगाई तो। अने आई रिक्वेस्ट CA योगेश अमल एंड CA उर्मी जगदीश जोईसर to please come on the dais and kindly start the deliberation.
Shall we begin?
If somebody can confirm whether the so thank you Bhavik bhai for this brief introduction. Good evening everyone. I am Yogesh Amal and I am partner at GBC and Associates LLP. With me I have Urmi. She's also going to play a role in the today's session. But before we commence today's session, I would just like to brief the flow of session today. How are we going to do? Starting with, I'm going to run through the important clauses of tax audit, some of the practical aspects or tips on relevant clauses that there could be some areas where we may be missing some points to be kept in mind. Once we are done with this brief on the presentation, Urmi is going to ask few questions, few relevant topics during on this tax audit, and then we will leave this forum open for any further question and answers. So this will be the brief flow of the session today. I hope this works with everyone. So with this brief background, let me start sharing my screen. So I'm assuming the screen is visible. So let's start. Okay, little brief background about tax audit. This was introduced in 1984, and the basic objective behind this introduction was that the assessing officer may get some important relevant data readily to them so that they can assess the income of the assessee in correct and true manner. That is one. Also, while during this circular, they had also mentioned that they wanted to also check, because there were few SSEs which department felt that they were doing a lot of fraudulent activities or a lot of fraudulent practices. So that was the another objective of the introduction of tax audit. And more important, that they wanted to ensure that whatever benefits or deductions which are available within the act, if those are verified by some independent chartered accountants, then it becomes easy to assess those deductions and allow those deductions to the SSE. So this was the brief background why this was introduced in 1984. Now, when it was introduced, there were very few clauses, but today, when it comes to the current Form 3CD, it has increased a lot of responsibilities on the auditors in terms of specific questions. Primarily, earlier, when you looked at the earlier clauses, of course, when I was doing my articleship and I saw the Form 3CD, it was more of a factual collection of information. But now, today, when we look at the Form 3CD, at many of the clauses, they are expecting that we comment on allowability or disallowability of certain expenses. So this is the sea change which has happened from the starting point of 3CD, Form 3CD to now. Just to give one more important point, that the primary responsibility of preparing Form 3CD is of the SSE. There was a lot of ambiguity or a lot of confusion between that who should prepare, because when you see the basic Form 3CD which was notified in rules from the department, it never had the SSE signature. It always had the chartered accountant signature. But we will all appreciate through Guidance Note Institute very well clarified that the primary responsibilities of the SSE and auditors are simply to review those replies and comment on whether those are accurate or otherwise. So this is little brief background on tax audit and what was the objective of introducing this form. Not spending much time here, but yes, we all know what are the turnover thresholds which are applicable for tax audit. In case of business, 1 crore or 10 crore, depending on whether you have what kind of cash transactions you have. So simply to simply say, if your cash transactions, receipts or payments are less than 5% of total receipts or payment, then the threshold limit for tax audit goes into 10 crores. In case of professional, it becomes 50 lakhs. There are certain sections which wherein you are charged on presumptive basis, which is one such section is 44 AD and 44 ADA in case of professional. We may discuss little more on 44 AD in coming slides. So this is the brief applicability of tax audit as it stands today. So as we understood that the critical factor to decide whether tax audit is applicable or no, the important criteria is to decide the turnover. And that's where there is a lot of there could be a discussion that what includes turnover and what excludes turnover. So one more point which I would like to highlight, in a common parlance or in a common understanding, we always treat sales as turnover. And that's where we fail to understand that the section or the requirement of law is turnover or gross receipts. Now, gross receipts actually is a wider term which surpasses sales and many other items which can be included as a part of turnover. And that's where I have tried to list down which are the various other items which could form turnover. Now, to discuss few important which we would be encompassing on day-to-day basis is export incentives is something which should be considered as a part of turnover. One should be very careful on that. Very important as far as share futures and options transaction is concerned. So typically, in case of shares, if those are treated as investments, it will not be part of turnover. But if those shares are treated as inventory, then those have to be, so any purchase sale should be considered as a part of turnover. Coming to speculation gain or loss. So while we all understand speculation gain loss, the value of transactions on a gross basis could be very high, but when it comes to settlement of a speculation transaction, it could be very low. So for purpose of turnover, what do you consider, the gross value or the net settlement value? So the answer is yes, net settlement value will be considered for the purpose of speculation gain or loss. One catch here is, as far as losses and gains is concerned, you'll have to ignore the negative signs of losses and whatever comes as an absolute number, you have to add those number and treat that as a turnover. I'm coming to that. So this was in case of speculative transaction. When it comes to futures and options, yes, again, futures is almost on the similar line of speculation. But when it comes to option, there was a change wherein for premium received on sale of options also should be treated as part of turnover. So what used to happen is earlier premiums were not considered as a part of turnover. People used to only consider the profit or loss as a part of turnover. And hence, there was a need to clarify that in case of options, whether premium should be part of turnover or no. So yes, even premium should be considered as a part of turnover. Sorry?
Only same as a future.
No.
Last year I didn't know.
Now, so what they are saying is premium you have to consider. Now, if that premium is part of your profit and loss structure, then you ignore it. But if it is not part of that profit, then you have to consider the part of premium.
Because now the broker report is coming.
So they are including now.
No, they are not including. They are giving only the absolute number of the profit and loss in a turnover option turnover.
I saw one report for this season, the earlier season.
Last year this changed.
I have a doubt. Let me check this in next few minutes and come back. Sorry. So there are live participants here, which we are having interaction. So what we will do now is any questions which is coming from live participants, let us speak those questions, and then otherwise the online participants may not get connected to that. When it comes to turnover, one more thing which I wanted to share is income from house property. Now, how do you treat income from house property? Rental income, basically. So again, if you are treating that as a part of business income, then yes, it is part of your turnover. But if you are treating that as an income from house property, then it will not be forming part of turnover. So what excludes turnover? Yes, they are already on the screen. But again, I would want to spend 2 minutes on insurance and GST specific. So insurance, if it is related to inventory item, definitely that will be considered as a part of your gross assets or a turnover. But if it is related to your fixed assets, then any receipts on account of insurance claim will not be forming part of your turnover. And when it comes to GST, now here this will depend on what kind of accounting policies one is following to record the transactions of purchase and sales. Now, if somebody is following inclusive method of accounting, if that being the case, then GST will be considered as a part of turnover. And if somebody is following exclusive method of accounting, then GST will not be forming part of the turnover. When I say what is inclusive and exclusive method, inclusive method means assuming if you have made a purchase of 100 and 18 rupees is stamped, 18 rupees is GST which you have paid. Now, if you are not parking that 18 rupees in your balance sheet, and if you are parking that in profit and loss account, in that case, that is an inclusive method. As if you are parking those 18 in your balance sheet as your liability or asset, depending on input or output, then that is an exclusive method. Would like to spend a couple of minutes here again that as far as accounting standards is concerned or guidance note on GST accounting earlier was considered, it always recommended that one has to follow the exclusive method, meaning your GST should be parked in your balance sheet routed through your P&L, because those are the taxes which are refundable. Now, whatever GST inclusive, exclusive, when I'm talking, it is mainly on a refundable portion. Something which is not refundable, definitely that will be forming part of your P&L account. So your accounting standards and guidance note says that those have to be parked in P&L. However, sorry, balance sheet. However, there is a section called 145A in Income Tax Act, which says that your purchases, sales, and inventory should be gross of taxes. Now, what does that mean? That do you keep a separate books of accounts for income tax purpose, or whether these adjustments of section 145A are adjustments as a part of computation? So the answer is those are part of computation. So what happens is in one of the clauses, definitely we will see. But typically what happens is when you make the computation, you start with your profit loss as per P&L. any GST impacts by virtue of non-following of inclusive method, you make an adjustment in your computation. This we will see in Form 3CD under one of the clauses. So this is something which was on GST. Various forms, as we know, 3CA, 3CB, 3CD, 3CB, basically a factual statement, as I said earlier, but now at many places one have to give a view in terms of allowability and disallowability. So that is form 3CD. 3CB generally we give in case of entities who are not subject to audit under any other law. In such case, 3CB is given, and in case of 3CA, if an entity is subject to any other law, audit under any other law, then Form 3CA is applicable. However, there could be some situations. So the example here is generally in case of corporate entities or trust or say insurance company or say banking company, generally you would give 3CA because those would have been audited in their respective laws. So to take an example, in case of corporate entity, if it was already audited, you will issue a Form 3CA. In general, this statement is true. However, there can be an exceptions. Now, those exceptions could be assuming in case of the corporate entity, if the calendar year or a financial year or a period for that entity is not April to March. So under Income Tax Act, you don't have an option to deviate with the year. Mandatorily, you'll have to follow April to March. But if books of account is concerned, you have a choice to follow a different period. Say somebody is following Jan to December. Now, in such case, the statutory audit report for that entity would be for December, say 23 in our case, if we are talking of financial year 23-24. So what happens when it comes to April to March? Because there is no statutory audit for the period ended March 24, one will have to issue Form 3CB and not 3CA in such cases. So there could be few more such examples. Now, again, there could be one more possibility, even though the company may be following April to March for their books also, but for some reason, they may have taken extension for holding their AGM and they may not be able to finalize the accounts before September, but your due date to file tax audit is September. Then what do you do? In such case also Form 3CA, 3CB will have to be issued and 3CA will not be applicable. So I hope forms as far as 3CA or 3CB is concerned are understood. I think with this, we jump on quickly to the clauses. Name of the SSE, not much to be spoken except for one caution one should keep in mind. In case of change of name after March, assuming before March it was ABC Private Limited and after March it is XYZ Private Limited, though the audit report is as of 31st March, one should mention the name XYZ Private Limited, formerly ABC Private Limited. That's how one should mention. As far as proprietary concerns are concerned, generally we have in practice of mentioning proprietary concern name. So ABC and Associates and bracket say Yogesh Amal proprietor. That is how we mention. And in case of branches, definitely name the branches. Address, any change in address, even though after March 24, say, you'll have to mention the new address, assuming as on the date of signing, the new address has been updated. Okay. So while under clause 4, we would list down all the registration numbers which the entity has taken under indirect tax. A word of caution here is assuming some indirect tax was applicable to SSE and the SSE has not taken the number. In that case, what do you do? So the answer is in such cases, we'll have to report that this was applicable and this registration has not been taken. Now at this stage, I'm not going into whether by not taking the registration, whether the accounts are true and fair, not true and fair, whether your main report may need qualification or no because of non-compliance of some law or non-provision of some liability or something else. But yes, if you come across some indirect tax which the registration was mandatory for the entity and which has not been taken, you'll have to report here. A profession tax, whether it is an indirect tax or no, the answer is no. Profession tax is not indirect tax. Yes, under common parlance, we know that this is managed by GST department, but actually it is not a indirect tax. It is basically a tax on the profession. IEC code, yes, that is an indirect tax. So these are few important points as far as clause 4 is concerned. Status, if somebody is expired and if the returns are filed under the legal hair capacity, then one may not mention, this may be true in case of individuals. So then one may not mention individual, but you'll have to mention that this is by authorized representative or in the capacity of legal hair. This is something which one should keep in mind. Fairly simple, yes or no option, whether your SSC has opted under these of the sections or no. So basically, selection of this sections, the choice with the SSC is before the due date of return. So there is a possibility that there will be a time gap between you finalizing the tax audit and return filing. So there is a possibility that SSC may not have filed these forms for opting these options. So in such case, if those are not there, then one should mention the fact that the forms are not yet filed, and that needs to be, I mean, this will be done in a due course. Pretty simple clause. One specific caution here, that if there are two ratios, there is a possibility that profit sharing ratio and loss sharing ratio could be different. In that case, what do you mention here? So you mention both, yes, profit sharing ratio and loss sharing ratio also. And which data do you mention, whether at the year end or whether any changes made during the year? So assuming there were profit sharing ratio at the beginning was something different, mid of the year something was different, and year end something is different. So one should mention all three changes, all the occurrence here, that so many changes have happened during the year as far as PSR is concerned. Any change in remuneration ratio? No. Remuneration ratio, no, it is required under this paragraph. Okay. So nature of business and changes. One important point one need to keep in mind is you have to really look at whether any changes which have been done are really qualifying within the nature of business changes. Now, assuming somebody was doing only domestic business and now started export business, is there a change of business? Definitely not. This is just an extension of the existing business. So one has to be careful while reporting under this paragraph. Any changes which you would have observed as compared to last year, not everything necessarily may warrant a reporting or disclosure under this paragraph. Books of accounts. Now, there are three paras under this clause, which is books of accounts prescribe, maintain, examine. So, word of caution here that not necessarily that the reporting under these three questions could be same. So some books would have been prescribed, may not have been maintained, something would have been maintained, may not would have been examined. So one has to be careful in reporting this paragraph under that which are the books of accounts which are prescribed and maintained and examined. Additionally, if your books of accounts are maintained on cloud or say not within the office, those facts have to be coming up very clearly under this paragraph. Okay. So method of accounting, as we all understand, there are two method of accounting, which is cash or mercantile. Anything other than this would generally be change in policy and not method of accounting. Now, policy, prospective, retrospective, estimate, all those things we will not discuss here right now. But principally, what we'll have to keep in mind is that when it comes to method of accounting, there are only two method of accounting prevailing, which is cash or mercantile. Hybrid is not permitted. Earlier it was, now it is not permitted. But in general, cash or mercantile. When it comes to accounting standard, even cash is not permitted, only mercantile is permitted. But when it comes to income tax, yes, they are permitting cash or mercantile system. So there is a possibility that some SSE for some source of income may follow cash accounting and for other source of income may follow mercantile system. Knowing that fact, we'll have to be careful in reporting under this paragraph. So the question here is that any change in accounting policy, we did discuss that whether it will be method of accounting change or change in accounting policy. The answer is it will be change in accounting policy. Another question can come up is, assuming if you are changing the method of valuation of inventory, what happens? So you've come from FIFO to say weighted average, or weighted average to FIFO, and so on and so forth. Whether that is change in method of accounting? No, the answer is it is not change in method of accounting. It is change in method of policy. So you may be valuing your accounting inventory at FIFO earlier, which you may change to weighted average. Implications of change in policy is that if you are really changing such policies, you'll have to quantify and may have to report, which we are not going right now. But principally, this clause required whether any change in method of accounting. Okay. So closing stock, we did discuss at the beginning that there are two methods permissible, inclusive versus exclusive. So typically what happens under this clauses is most of the corporates you will find that they are following exclusive method. In fact, even non-corporates would follow exclusive. There is a possibility that somebody may follow inclusive method. So the pitfall of this is that assuming if you are not following, if you're a corporate entity and following inclusive for some reason, there would definitely be a qualification in their statutory audit report that they are not complying with accounting standard or Ind AS. And if you are following that, and if you're not following inclusive, then there will be a qualification here that you're not following inclusive method as far as income tax act is concerned. So take a pause here, understand that something or other will have to be reported depending on what kind of accounting policy the SSE is following in their books of account. We did discuss that as far as section 145A is concerned, 145A recommend whether insists that your purchase sales inventory should be gross of taxes even though they are refundable. So typically in books of accounts, when we are following exclusive method, the numbers which are reported are without taxes. So what guidance note says, and what in my view as well, that even if you follow this inclusive method of accounting, which is requested in section 145A, there may not be impact on your profitability, meaning irrespective of whether whichever accounting method you follow, your net result as far as your profitability is concerned will remain same. This has been confirmed in guidance note. However, in earlier guidance note, they used to give one reconciliation table, which is not coming in now, wherein they used to explain how your accounting will not matter when it comes to calculation of profit. But what we at our office we follow that practice of still reporting that reconciliation table, wherein we may start with change in value of closing stock, change in value of purchase and sales, change in value of opening and closing stock, and change in value because of consumption of goods on account of cost of sales. And we give the reconciliation showing that irrespective of whichever method of accounting which we would have followed, the result on profit would have been nil one. Further, when it comes to value disclosure as far as inventory or closing stock is concerned, we also compute the value of closing stock considering inclusive of taxes, and we report under this paragraph when it comes to only closing stock. So typically in our case, books of accounts say inventory will show 100 rupees. Of course, that will remain intact as it is. But when it comes to reporting under this paragraph, we show inclusive of taxes, which will be 118. So that will be an inventory for tax purpose, but for books purpose, it will be 100. Okay. So particular assets converted into stock and trade, simple, depending on the one thing one will have to keep in mind is this only talking of reporting for assets which are capital assets converted into stock in trade and not vice versa. That is something which one should keep in mind, that if some stock in trade has been converted into capital assets, this standard may not, this paragraph may not warrant any further disclosure. Cost of acquisition for such assets would be books cost, which is considered as a part of books of accounts. And while reporting under this paragraph, one will have to keep AS2 or Ind AS2 and fixed asset standards in mind to report under this paragraph. Okay. So there is a possibility that there would be few incomes which may not have been credited to profit and loss account. To be more specific, let's discuss two such things where they are asking admitted by concerned authorities. Now, what does admission by concerned authorities mean? We'll have to be very careful. Simply receiving, say, intimation or something like that. I mean, intimation is actually a wrong word. Intimation would mean that those are admitted, but something which has a concrete documentary evidence that yes, this has been accepted by the authorities. Only such items which are not forming part of profit loss account or may would have been routed through balance sheet will form a reporting here. When it comes to SSEs where who are following cash basis of system, this may not be reportable here because whatever receipts those SSEs are, they will be recording as and when those are received. So the idea here is that there's a possibility that some claim would have been admitted by the authorities, but they would not have been received. Now, whether such claim are taxable, not taxable, when taxable, so the department would want to collect the information and decide whether those should be offered in which year, and hence this paragraph. Escalation claims. So again, very important thing, escalation claims. Again, escalations claim, those takes a color when it is only accepted by both the parties and not, this should not be from one side. So assuming I have raised a claim to somebody on account of escalation, but the other party has not accepted it, this reporting may not come here. So again, that has to be kept in mind for escalation. Any other income? So any other income here would actually mean the income which would be forming part of your business activity, which would form part of your business sections and not something which is outside your business section. So an SSE may have some income from other sources. Whether those would be reportable here, the answer is no. So this may be true in case of proprietaries or individual SSEs. So one has to be careful while reporting under this paragraph. Capital receipts, whether what kind of capital receipts one should report here. Capital subsidies, compensations, which we may not have been taken to through P&L. So all those items which would be which are in the nature of capital will have to be disclosed here. Transfer of land and building at lesser value than stamp duty value. Of course, old section, nothing much value addition here, except for one word of caution here. People generally forget when we say the leeway of 10% may be under any of the section. Now, one should be very careful. How should this 10% be calculated? What base value it has to be considered? I just give an example. Assuming my agreement value was 100 and my ready reckoner value is 110, then whether this is right or wrong, the answer is typically what happens is people take 110 as a base value, consider 10, which is 11 in our case, and say that agar mera 99 ka agreement hai, so it is okay. So whether this scenario is right or wrong, the answer is no, it is wrong. It should be actually, अगर जो मेरा 100 rupees का agreement value reckoner value है, so I'll have to start my base agreement value. So assuming if my agreement value is 91, 91 का 10% I have to consider and not reckoner value का 10%. So this is something which one should keep in mind while reporting under this section. But there can be a scenario where agreement would have been entered, but registration may not have happened. Under such scenario, what do you do? So what you should do in that case is you should take the help of some other expert, maybe take what is the reckoner value and do the reporting accordingly. Whether this paragraph or this clause is applicable to transfer of leasehold rights or development rights or TDR, FSI, this is a little complex topic which cannot be discussed or which will take a longer time. I am just highlighting here that if you come across such facts, case will have to be seen separately for these specific or special items, which is leasehold right, development, TDR, and FSI, and accordingly the call will have to be taken. What value one should take, the date of agreement or the date of registration? So the answer is the value is on the date of agreement is something which should be considered for the purpose of this clause as far as reporting is concerned. Fixed assets, nothing much except for section 43A. Okay. So in case of long term or in case of fixed assets which are borrowed from a foreign currency loan or by supplier as foreign currency, what happens is there is a possibility that one may have an exchange gain or loss, realized and unrealized both. So in case of unrealized forex gain or loss, accounting standards AS11 allows to capitalize that as a part of fixed assets. Ind AS does not permit so. But when it comes to section 43A of Income Tax Act, which talks of cost of acquisition or which allows certain items to be capitalized as a part of fixed assets, it categorically says that any unrealized gain or losses on forex should not be forming part of block of assets. Only and only realized gain or loss should be adjusted as a part of block of assets. Now, as far as Income Tax Act is concerned, it only allows to capitalize as a part of assets. It does not allow to claim the deduction. Whereas when it comes to Ind AS, it can be forming part of P&L. AS, you have a choice whether you want to capitalize or not. So one will have to keep a reconciliation if the assets are brought or purchased or acquired through foreign funds. If those funds are revalued when it comes to accounting standard is concerned and there are unrealized gains. So those reconciliations will have to be kept on year basis. Employee benefit, I mean, now the dispute is settled, but there were some issues earlier with that when it came to employees' contribution, employee share of contribution beyond the due date prescribed under the respective act, but before filing of date, there were a lot of case laws which were allowing such situations. But the law has now been amended, and it is very pretty clear that any employee contribution which is paid after the due date of respective due date will be considered as income and will not be allowable as a deduction. Okay. So clause 21 talks of certain expenses which mainly deal with allowability of those expenses. In general, if I have to summarize this clause, what I would do is to classify those expenses into a bucket wherein the expenses which are purely in the nature of pain, even only those expenses would be considered for the purpose of disallowance. Now, there is a possibility that under some law, the nomenclature could be fine or penalty, but the basic code under collection of those amounts would not be penalty or in penal nature, then such case, those expenditure will be allowable and should not be reported under this paragraph. Typically, if I have to give some specific reference on it, one thing to be kept in mind here is that even section 40A, 1A disallowances, which are on account of TDS non-deduction, are reported under clause 21. So one should be careful while you are reporting under those paragraphs that these amounts are correspondingly matching with your clause 34 as well. So amounts inadmissible under section 23, clause 22, this is mainly talking of MSME interest. And now with the revised modification in Form 3CD, it also talks of disallowances on account of delayed payment to MSME. Typically, the amendment happened in section 43B, clause H, which says that under certain circumstances, in case the amounts are delayed or payments are delayed on account of payment, then those will be allowable only under certain circumstances. Now, this amendment happened in section 43, but this reporting of this disallowance is not covered in clause 26, which typically covers the reporting of various 43B allowances or disallowances. So what department has done is all the reporting related to MSME, they have considered this clause 22 only for the purpose of collecting data. There are two reportings required here. One, interest disallowable under Income Tax Act for payment to MSME, and any amounts which are disallowable on account of delayed payment. Now, both this reporting will be forming paragraph under this clause. Talking on interest disallowances, yes, typically this amount will be disallowed if the interest is provided and paid, or even if it is provided in the books of account. But for all practical purpose, we would have observed that most of the SSEs are not making any provisions of these interest payable to MSME, and they argue that there is an arrangement or an understanding between the vendor and this customer that they are not going to collect any MSME interest. Now, so far as reporting of under this clause is concerned, I'm fine. You may not report anything because there is no provision or payment made to MSME interest. Now, I would like to highlight one point here is one will have to be careful while issuing the audit report, statutory audit report, if it is a corporate entity, and Form 3CB, if it is a non-corporate entity, that whether non-provision of interest would warrant any qualification or disclosure. Now, there is a possibility that interest amount could be very high, which would be much beyond the materiality threshold. So there is a possibility that you may qualify the main audit report or Form 3CB in case of non-corporate entities, in case of non-provision of interest to MSME. So this is on the interest front. Now, coming back to principal MSME. So, as far as reporting under this clause is concerned, there are no further reportings except for one, the amount. So if you look at the Form 3CD, it says amounts disallowable under section so and so. So no further reportings are required in terms of name, dates, delayed time frame, so on and so forth. Only amount is to be computed. Now, because of this, there is a lot of responsibility on us as an auditor, that on a back end, lot of information will have to be combined, starting with, or what would be starting point when it comes to computing amount under this paragraph. Starting point would be your outstanding MSME payables as on 31st March. You go and see when are those payments made to those MSME, and decide, depending on that, you decide whether those are allowable or not allowable. I am pausing as of now on this. For now, I'm sure there are a lot of other questions which will come up, and I would want to respond at that stage on this MSME specifically. But when it comes to reporting specifically, yes, here only amount is required to be reported. Related party, yes. One will have to be ensuring that there is a correlation with this clause and AS 18 reporting as far as corporate entity is concerned, and even for that matter, corporate entity is concerned. I'm assuming that we all of us are aware that even for non-corporate entities, there is an note issued by institute, which and there are accounting standards which are issued by institute for non-corporate entities, which in general, the belief is that those are not applicable to the non-corporate entities, but the answer is those are applicable, and for all the audits or for all the SSEs, all the accounting standards are mandatory. Of course, depending on their level, some of the disclosures may not be applicable, some of the provisions may not be applicable of those standards, but yes, even to non-corporate SSEs, the accounting standards are applicable. So for all practical purpose, even non-corporate entities will have to report AS 18 disclosures as far as their books of accounts is concerned. So connecting those dots, one will have to make sure that whatever is reported here is matching there. The only difference between there and here could be that under related party transactions reporting under AS 18, you report all transactions which will include revenue, capital, borrowings, lendings, everything. Here, one will only restrict to the transactions which are in the nature of expenses which have been debited to profit loss account. So only those reportings will come under this clause. Disallowances under section 43B, we did discuss, except for MSME, I would not want to discuss this here right now. So I've presented here, but as we discussed, it should be reported under clause 22 and not under clause 26. Clause 26, 27A, reporting of SENVAT. I have seen audit reports where people are reporting even GST today under this paragraph, but the answer to this is no, those are not reportable. Only items which are in the nature of SENVAT, which was earlier erstwhile in the excise law, there was a SENVAT law separate, only those items will be reported here. Today also there may be some reporting for the entities who are under the excise regime. So there are fuel, there are liquors, and there are a few more items which are under excise regime. Those SENVATs only will be reported under this paragraph and not GST, which is though refundable taxes. Prior period items, in generally, you would get this from books of account, from your statutory audit account, but would like to highlight that assuming if your statutory auditor has forgotten, what do you do as a tax auditor? Do you have a responsibility further to go and see whether there were any prior period items or no? Answer is yes. As an auditor, you still have a response. As a tax auditor, you still have a responsibility to check whether there were any prior period items or no, irrespective of whether those were reported as a part of your financial statements or not. Issues of shares higher than, I think this I would want to skip. For feature, not the relevant paragraph on day-to-day basis. Okay. So clause 31 basically talks of loans and deposits, which is section 269 SS, section 269T, 269 ST, so on and so forth. In general, these are more or less settled provisions. However, I have observed that people are still not reporting right under these paragraphs. And one such item of not getting reported properly is security deposits. Now, if you read those sections, it does not talk only about loan, it is also about deposits. So one should be careful that if there are any security deposits in the nature, even those will call for a reporting under this paragraph. People are not reporting transactions by way of journal entries. However, in my view, yes, even those should be reported. There are a possibility that few transactions would have been adjusted through journal entries. We do report that these are the transactions which are otherwise done by an account pay, check, draft, or ECS. Allowability, disallowability, penalty under section 269 ST, we don't comment. We simply report that yes, these were the transactions which are not by an account pay, check, or draft, or any banking channels. One more practical aspect here is typically what happens is in case of small entities, any loan, any interest accrued on the loan, generally the SSAs would park in the loan account, and corresponding TDS on the interest again would be routed through those loan accounts. So under such situation, what does one does? Whether those interest or TDS will take the color of loan, or whether those would be required to be reported under paragraph or clause 31 or no. So there is an answer yes and no to both. Yes, if those loans are or interest are taking the color of loan, meaning if those interests are getting accumulated and maybe in coming years even further interest would be provided on those interests, then that takes the color of loan. In such cases, those will become loan which is reportable under this paragraph. And assuming if those are not taking the color of loan, then we don't report. Practically what we do here is we insist client to not route any interest or TDS through those loan accounts. We keep them, or we request them to keep the loan account intact and route those interest or TDS through interest payable account or some other payable account, and not through loan account. So this is something practically one will have to advise or guide the client. Brought forward losses, nothing much here. A lot to be reported under this clause. If you really want to report in true sense, then one has to really match the reportings of TDS returns with your books of accounts. So for example, one will have to report, say I'm taking an example of repairs and maintenance expenses. Now that may include material purchase which may not warrant any TDS deduction, and some services which may warrant any TDS deductions. So typically when we look at the headers of this reporting, the eligible amount, the amount on which the TDS was deducted, not deducted, so on and so forth. So typically, even the amounts which are included as a part of repairs and maintenance will have to be analyzed, have to be ensured that those are treated or verified based on the reporting of those tables, and necessary reporting to be done. But for all practical purpose, what we do here is, as far as starting point is concerned, what we do is we take the console file of the client for various TDS returns. We merge those console files as an annual basis, the quarterly console file, and then start reporting here, and accordingly we report under this paragraph. We also mentioned that we may not have checked 100% here, and our verification have been test check basis on account of voluminous data, and guidance note very well permits this kind of disclosure as far as this clause is concerned. Very straightforward reporting, except one word of caution here again is, earlier pre-GST regime, what used to happen is people used to write that we have relied on the inventory verification and valuation based on the management, and day-to-day inventory has not been kept. So we are only reporting as far as closing inventory is concerned. But now with GST regime, where I believe even GST law mandates to maintain the quantitative details on detailed basis, may it be purchase, may it be sales, opening, closing. Now, non-maintenance on day-to-day basis under this clause may not be right, because there is a high possibility that GST auditor may be reporting those numbers there, and you may fall flat when you report that the SSE is not maintaining on day-to-day basis. So this is one important area which one should keep in mind. Another important area where one really finds difficulty is to report on yields and shortages when it comes to manufacturing entities. So one should be careful what numbers are you reporting. There are high possibility, because when you try to report for manufacturing entity, your composition of raw material and your composition of output could be different. Your shortages and your excesses would give some weird numbers. So be careful while you are reporting specifically for manufacturing entity. Deemed dividend, any deemed dividend which is not offered for tax has to be reported here under this paragraph. Not going into the calculation of deemed dividend or under what circumstances there will be deemed dividend or no. Coming to clause 44, bifurcation of expenditure under GST, again, of course, otherwise a well settled clause now, but still there is a doubt in the minds of people that whether what kind of disclosures are required. Do you give various ledger headwise or otherwise, any other details? I think the answer is pretty simple here, that you give only two line items, or rather, even if you give one line item, that is fine. But as a practice, what we are doing at our office is we are giving two line items. One line item is for revenue transactions, and line item is for capital transactions. And why are we doing this specifically is because when it comes to revenue transactions, you can easily correlate or match with your profit loss account, because there is a possibility that there are items which would be part of this reporting, but they may not run through your flow through your profit loss account. Those may be sitting in your balance sheet, such as purchase of capital goods, charges or labor charges on those capital goods. Hence, we maintain it's two separate line items. One is for revenue and one is for capital, and accordingly we report. As far as reporting under various columns is concerned, whether composition, exempt, registered entity, non-registered entity, uh, yes, there could be few debates or questions. There were few debates or questions earlier that what would fall under exempt or what would fall under composition, but I think now GST is pretty clear. It basically says whatever falls within the definition will have to be considered as a part of exempt on all the respective columns. And further, it also says, the guidance also says that you have to prepare these kind of chart which will give you the control of whatever transactions you are reporting, and this will help you in preparing the reporting under this specific clause 44. These are examples of what would fall under reporting categories or not. Maybe interest, these are exempt, salaries, they are not supplied, depreciation not supplied. So these kind of transactions will not be considered for the purpose of reporting under this paragraph. Again, as I mentioned in clause 34, when it comes to starting point here, as our practice, what we do or what we use as a starting point is 2A, 2B, because this is one statement which will have all the transactions irrespective of whether they are falling part of your profit loss account or balance sheet. So this should be the starting point to reconcile these numbers. So these were few critical important points or practical aspects on some important clauses which I felt that those may be relevant, though nothing new much on these areas. But this could be these are some fine or small important points which there is a possibility that one may tend to forget, or one may tend to forget the reporting on those areas. So these are important clauses. With this, we are completing part one of our discussion. By the way, how do we take the second part? Do we break for a couple of minutes, or like what is? All right. There are questions online? All right. Okay. Just give me a second. Or do we start with the question and answers, which Urmi has already? So do we start that? So the second, we start with our second portion, wherein Urmi has listed down few important questions. and we start reporting. Just give me a second before you start. Those questions should be in hand.
Mention that you have received those questions from participants. Also, we need to open for offline.
I have questions which Yogesh has given.
No, those are from participants.
From the participants.
Should I?
Yeah, I think we can go ahead.
Okay. First of all, I would like to thank Yogesh Bhai for such wonderful explanation. And since I work in audit, and so I work in Deloitte, I work in statutory audit. I'm the assistant manager, so it definitely is going to help me when I do tax audit. So yeah, let's start with the questions.
All right.
Okay, so like you started with applicability of tax audit. So first of all, tell me whether a non-resident who is conducting business, is that person subject to audit under section 44A?
So yes, all the persons are subject to under tax or subject to get their books of accounts audited under section 44AB. Because when you look at section 44AB, it does not bifurcate between resident, non-resident, so on and so forth. It talks of any person carrying on the business is and complying with certain conditions will have to get their books of accounts audited. Hence, the answer to this question is that irrespective of the residential status, one has to get their books of accounts audited under
So to
44AB.
summarize, the residential status doesn't
Doesn't
matter.
matter.
You
at
have
all.
to, if you're
Yes. So if you are meeting those thresholds of turnover, if you are meeting those thresholds of, I'm not debating on 44AD, so on and so forth, but we are assuming those thresholds are met. Yes, one has to get their books of accounts audited.
Second question is, if example, there's somebody who is salaried employee, for example, me. Do I have to get accounts audited if I'm also trading in derivatives, say futures and options?
So again, the answer to this question lies in my response to the earlier question. So if a person is doing certain type of activities, which is in the nature of business, of course, derivatives, futures and options are treated as business activity when it comes to Income Tax Act. These are not part of your investment schedule. So you being a salaried employee, there is a possibility that you may be making few investments. Now, those investments you may be classifying as long-term or short-term, depending on the holding period. But when it comes to speculation or these kind of transactions, those are always treated as business income. So yes, if again here the threshold is crossed when it comes to these type of transactions, here also the audit will be applicable. But typically, I'm happy somebody asking this question, because what happens is the common understanding between the employees working at various top level is कि as far as मेरा salary आ गया, मेरे salary में से TDS हो गया, तो मेरा compliance for taxation purpose more or less हो गया, अब मेरा कुछ भी taxable नहीं है. I have seen a lot of employees, they are not offering their savings के incomes in FDs, ये capital gains, not for the, they are not offering for tax because they are under the impression कि salary में से TDS हो गया तो सब कुछ हो गया. That's the general perception. So one has to be careful on this.
Okay, so our last question on applicability of tax audit. If there is one person, Mr. A, who is a partner in a firm and he has obtained remuneration of say 12 crores from the firm during financial year 20. Is it mandatory of that person to get the accounts audited since the remuneration received from a firm is exceeding the specified limit of tax audit?
Good question. I believe the question is from a perspective that since the amount is more than 10 crores, which is 12 crores, the threshold for getting the books of accounts under circumstances, assuming is 10 crores, whether the income, which is share of profit, which is part of my business sections, whether this will be treated as the turnover. Now, if this session was happening 1 year before, probably the answer would have been yes. This was considered as a part of remuneration. Remuneration was considered as a part of turnover gross receipts, and hence the department had taken a view that yes, tax audit will be applicable for this remuneration. However, last year there was a categoric judgment from Supreme Court where Supreme Court said that though these incomes are as a part of business source, but this will not be considered for the purpose of gross turnover or gross receipts. Hence, tax audit may not be applicable because of these incomes. So as I said, 1 year before, probably my answer would have been yes on this question. The answer now is no. You should not be getting your books of accounts audited for such situations.
Okay, perfect. Now we are coming to 4480, presumptive taxation. So, for example, there is somebody whose turnover is more than 1 crore, say 1.5 crore, and that person is incurring losses. So, then do we need to apply tax audit?
Okay, so before I answer on 4480, I would like to summarize just a second.
Okay.
Just a second. I would like to briefly touch upon what is section 4480, to whom it is applicable, because this is a very relevant section.
Right. What I remember is this is ICI's favorite question to ask, 4480 presumptive taxation.
And let me tell you one thing. Today, I may have an answer to this question, but again, tomorrow, if somebody comes up and asks me any question on this, I have to again go and refer back to the section because I would not remember this. It is drafted so complicated that one would definitely not remember. So every time I have to go back to the section and do the analysis whether for such situation, whether the 4480 is eligible, not eligible, and so on. So to briefly, 4480 typically will not be applicable for few persons or for few class of business. The business which is covered under 4480A, which is professionals, the business which is 44A, which is hiring of vehicles or plying of hire of vehicles, agency business, commission or brokerage business. This is one important applicability parameters one has to keep in mind, 4480. Another important thing which one should keep in mind as far as 4480 is concerned is it is a qua person and not qua source. So the example here is assuming there is one source of business of income, mine, which may be eligible for 4480, but I am also a professional, wherein such professional income may fall under a category of 4480, or I am also having a commission income. Now, the moment I have commission income, this section gets triggered and I may not be eligible under 4480 because 4480 is applicable qua person and not qua business. So a very important thing one should keep in mind. It is applicable only to individual HFF and firms. Again, one should keep in mind that it is not applicable to LLP. Now, why I'm saying firm or LLP, why I'm specifically saying firm or LLP, for all other practical purpose under Income Tax Act, firm and LLP are on the same footing. LLPs are treated the way firms are treated, but for this section, or there are a couple of more such sections where LLP are treated differently. So if there is a firm, there is a possibility that they can opt for 4480. In case of LLP, they have no choice. This is something which one should keep in mind. Very important aspect one should keep in mind as far as 4480 is concerned. This will be only applicable in case of situations where your income is exceeding maximum marginal or maximum chargeable for tax limit. So typically in our case, if you assume if my income is exceeding 2,50,000, then only I will have to look at 44AD and 44AB and so on and so forth. The moment I am below 250 or the moment I am into loss scenario, I need not worry about 4480. That is something again important on 4480. And once I have opted out of 4480, I have no choice, but I'll have to stay out of 4480 for at least 5 years. Now, when this opt-out is discussed, this opt-out is voluntary opt-out and not an opt-out by virtue of law. So there are certain circumstances under law may not permit you to stay in 4480. If those are the situations, then those will not be considered as opt-out. Those will be an exception years for those calculation of 5 years. So this is brief about 4480. I have tried to divide 4480 into 2-3 categories, which I would like to discuss. For the SSEs who are having turnover between 0 to 2 crores, 2 to 3 crores, and 3 to 10 crores. Let me take first scenario 3 to 10 crores. Now, if your SSE where turnover is 3 to 10 crores, and if your cash receipts or expenses are less than 5%, you may not be required to get your books of accounts audited. irrespective of your profit declared. See, 44AD requests you to declare profit 6 or 8% depending on whether you have cash business or non-cash business, your banking channel business. So irrespective of whatever profit percentage you get out of audit, and if you are into a category of 3 to 10 crores ka turnover, and if you have cash transactions more than 5%, then yes, you are subject to audit under 44AD. Now this was for category 3 to 10 crores ka turnover. Coming to category 2 to 3 category turnover, 2 to 3 crores ka turnover, if your cash is again less than 5%, but you are declaring you have to declare profit of 6 or 8%, then no audit, otherwise audit. Now typically what happens in this situation is 44AD is actually a presumptive based taxation. Now what does presumptive means typically is you give certain ease to the SSE, wherein if somebody is following into presumptive taxation, you will be taxed under certain formula and you are relieved of all other procedures of Income Tax Act, such as maintenance of books of accounts. Now, typically, because of this wrong problem, the way it is drafted, what is happening is small SSEs, which is 2 to 3 crore ka turnover bracket, have to mandatorily show higher profit, which is 6 or 8%. If they are not doing that, they have to get their books of accounts audited. Whereas an SSE who has got turnover of 3 to 10 crore, which is a bigger SSE, which is a larger setup SSE, has got no restrictions. It can declare any profit and still get away out of tax audit. So ये थोड़ा सा anomaly है in 44AD for these two type of turnover transactions. Now coming to, with this background, now coming to your question, you mentioned that the turnover is 1.5 crores and the SSE is having loss. So as I mentioned in my discussion, at the moment you are below that maximum amount chargeable to tax or a last situation, you may not do any audit. Hence, the audit is not applicable in this clause because you are having a loss.
Okay. Since it is very complicated, I would like to add one more question so that it's more clear. So, for example, my turnover is more than 1 crore, say 5.5 crores, and I have a loss. What then?
So again, in my discussion, we discussed it. That moment you are above 3 and within 10, there is no restriction on you. I mean, there is no levy coming on to get your books of accounts audited because you are falling into that bracket. The anomaly which we discussed.
Right.
So here again, even though somebody is a big SSE with this large turnover, assuming if their transactions of cash are less than 5% and having a loss,
yes,
no audit. But if your transactions are cash, your transactions are more than 5%, then audit will be required.
Okay. Tell me something, is 44AD mandatory or is it optional?
It is mandatory. So the moment you are following the criteria of those sections, this mandatory applies to. So it is a mandatory.
So you have to get your accounts
audited, not audited, depending on your clauses of 44.
Okay, perfect. Can a taxpayer voluntarily opt for 44AD, declaring like a high income in his return?
Okay. So the question is voluntarily. I'm saying if you read this section, if you have income more than what is expected under 44AD, you have no choice but to declare the income which is higher.
Right.
However, to be very honest, and within this room, I have seen people are simply offering this 6 or 8% whatever is required and getting away with declaring higher profit. But in my view, those are not, that view is not right. You will have to show a higher income.
Right. Okay. So like you explained 3CA, 3CB. So my first question is when to issue these forms 3CA and 3CB. And my next question is what happens in case of merger where financials have to be restated?
Okay. So we did discuss in my discussion under what scenario 3CA and 3CB is applicable. We did discuss certain exceptions, but this is another further exception where in case of merger, what happens? So typically, as all of us know, there are possibilities that when you actually apply in NCLT or in High Court for merger, and by the time you receive the merger order, there is a big time gap. Now, there are high possibility that your due date of filing tax return for the year would have actually, I mean, that would have come and you would have still not received the merger order. Now, in that case, what happens is that first place, assuming on 30th September, for both the entities, you will have to file the independent 3CB, assuming tax audit is applicable to them. Now, you received a merger order after 30th September, but again, the effective date was, say, 1 year before. This is a question where what do you do under such scenario, whether you would need a revised 3CB or 3CA, whatever applicable. Answer is yes, and the answer is 3CB only. It will be applicable. 3CA will not come under such scenario, because for that combined financials, combined merged entity, you will not have any specific statutory audit separately, and you will have to issue 3CB in such circumstances, and you'll have to file the revised 3CB with the merger order. Now that we are on filing the revised returns, just one more situation came in my mind, is revision of Form 3CB and 3CB in a scenario of 43B items. See, take a situation where I have finalized tax audit in the month of May, wherein any bonuses which were allowed to be paid until say 30th September, if and for my tax audit purpose, because those are not paid as on 30th May, I would have reported as stupid disallowed, because those are not paid as on that date. Now come to say the clients typically pay bonus in Diwali. Say, and Diwali is first week of October, and your tax and your return filing date is 31st October. Now SSC would definitely want to claim that bonus paid during Diwali in your tax returns. Practically what happens is, in this technology world, the moment your 3CB says disallowed, SSC claims allowed, it actually system just matches it and throws out and says this will not be allowed. Now, to avoid such situation, department has prescribed a procedure that under such situation, say after your bonus paid, you can file a revised Form 3CB. Of course, you'll have to comply with accounting standards, standard of auditing, so on and so forth. That under what circumstances or under what situations you can issue revised audit report. I'm not getting into those things, but you can issue revised reports and you can file revised Form 3CBs under such situations also. And of late, now I have seen that many of our clients are insisting to issue those kind of additional reports for further filing to claim those deductions.
Okay, perfect. My next question is, on what date report is said to be furnished to the tax department?
Typically, I think this question is from a perspective that because Form 3CD has to be first filed by auditors and the SSC has to accept it or client has to accept it. Now take a scenario where today I have filed or uploaded 3CD, the client accepts it on the next day. So the fight is technologically की वजह से there is a problem. I believe it takes the next day का filing date. But consider a situation or the law where the requirement of issuing audit report was as on 30th September. I, as an auditor, have already issued that report. But then the authorities are saying that just because SSC has not accepted it, it is not to be considered as issue. So one will have to be very careful in these situations, specifically on the last day. Make sure that your tax audit reports are accepted by the client before the closing of last day and not kept it for next day's acceptance. Practically, I have seen the date, even though you accepted next day, date of filing usme for in your receipt comes agle din time. But I would not want to take chances that tomorrow department may come up differently. Not different.
So in case of tax audit, client acceptance is really important.
It is important from a technology perspective,
Right.
the way things are working right now.
Okay. Coming to my next question, whether a tax audit report, whether it can be revised.
Oh, we did discuss this question.
Yeah.
I just covered it along with the other. question.
Okay, and you also said the timeline also. So
Yes.
let's move to another question. So let's talk about clause 4 of form number 3CD. It asks the tax auditor to disclose whether the assessee is liable to pay indirect taxes. So how should the tax auditor ascertain the relevant taxes which are applicable to the assessee?
Of course, we did discuss while we were discussing this clause that it is a responsibility of tax auditor to ensure or to make sure that verify whether all the indirect laws which are applicable to the SSE are applied with and reported. Now the question here is how should
The auditor will know.
auditor will know? Of
If
course, so typically, what I have seen is when people are doing audit, people are simply relying on what data SSA is giving. People are not looking at standard of auditing, which, of course, we all of us have studied in our exams. That there is a standard of auditing which warrant all of us to know all the law which are applicable to the entity and decide and make sure that whether when we are reporting true and fairness, even those laws are covered. So yes, there is no direct answer that how should ascertain, but yes, auditor should be vigilant or alert to ensure that whatever situations SSC is into or whichever scenarios SSC is into, you should ensure that whether all those laws around that SSCs are followed or not. These days, there are a lot of tools available when it comes to applicability of law is concerned. We use one such tool, I don't remember the name in our office, wherein if you give the nature of business to that tool, it will give you the list of laws, various list of laws which are applicable to the SSC. So yeah, very important tool. When I'm on tool, I will share one more tool. I can share the name also as well. Corpository. When I do audit large audits, uh, there's a tendency of auditee that they don't disclose a lot of information. But that tool, if run, it gives me all the data which is available in public domain. सो अगर जो कोई हाई कोर्ट में केस चल रहा है, जीएसटी की कोई नोटिस है, ट्राइब्यूनल्स के कोई केस चल रहे हैं, जो भी पब्लिक डेटा में डोमेन में अवेलेबल है डेटा, इट पुल्स आउट एवरीथिंग एंड इट गिव्स मी अ नाइस समरी कि ये सारे प्रॉब्लम्स है. Now this helps me in reporting for contingent liabilities. So yeah, I think this is something which corpository that I don't remember. I will have to check at my office. Close the session.
Okay. Next question. How to report the conversion of a partnership firm into a company and whether if there is some conversion, say I owned a partnership firm and now I'm converting that to a company. So do I have to file 2 audit reports or what is it?
So as we discussed, I missed to discuss in my previous talk, Form 3CD again is qua SSC and not qua business. What does that mean is, I am having two business, whether there will be one Form 3CD to one business and second Form 3CD to second business, or whether there will be Form 3CD to only one business, not to second business. There could be multiple scenarios. But keeping it simple, assuming both the business are covered under 44AB, typically one or legally one Form 3CD is required. So as I said, because it is qua SSC. But for all practical purpose, as I said, there is a possibility that one may issue 2 reports, but legally one Form 3CD is required. Why am I saying this? Is because even technology will not support. Now, when you look at the way you upload the Form 3CD, you can only upload once. So you'll have to incorporate all the data of multiple concerns as a part of one 3CD. Now, coming back to the question here, as I said, it is qua SSE and not qua business. Now, partnership firm and company are 2 different SSEs because PAN number is different. So the answer is that yes, 2 different Form 3CD will be required and not one Form 3CD. In common parlance, we understand convert तो हुआ है मतलब यही तो entity है, but no, entities are legal, different PAN, different registration numbers, two separate forms. One practical experience I will share. I don't know whether legally that is right or no, but conversion of partnership firm to an LLP. Now, what is happening is, in that case, as I said, income tax department is treating firm and LLP at same level at par. They are not changing the PAN number. So if the firm ka partner PAN number and the LLP ka PAN number is same and is continued, then only one.
Okay, so to summarize, it depends on PAN number. If you have the same PAN, not
As I
required.
said, it is qua SSE.
Right.
So the moment you say qua SSE, PAN becomes an SSE.
Right.
Depending on that, you will.
In attachment, we can have two different.
But when it comes to XML,
XML, it will be single.
only one single. Attachment probably yes. Attachment probably yes. You can put it there.
Okay. So now coming to clause 20, which is employee benefits, and here we'll talk about employee contribution to funds. So for example, अगर ऐसा हुआ कि delay हो गया payment में, उन्होंने बोला कि हाँ technical glitch आ गया, तो क्या is it a disallowance or is it what is it?
Okay. So in pure practical sense, technical sense, and looking at the technology, yes, it will get disallowed. Why? Because under that paragraph, the way you give data, you give amount, you give due dates, you give payment dates. System to catch कर लेता है. But this is a good case to fight. What we do is system जो catch करता है करने दो. In our physical form, what we do is we put a note below. Now this may be good case to fight, provided SSE has taken all the screenshots or has enough documentary evidence to justify that there was a technical glitch. I, as an auditor, would see those documents, see those evidences, and if I am convinced, then probably I'll put this note. Fighting difficult रहेगा department के साथ, because as I said, these days technology is driving the law and not law driving the technology. So there is a high possibility कि ये amounts add हो जाएगा और add होके आए हैं, हमने देखा है. We have applied in rectification in couple of our case. They have denied those rectifications. We have gone into appeal, and at appeal level we have got relief. So this is the practical experience which I can share, that at appeal level we have got the relief in such cases. But you'll have to keep all the documentary evidence to demonstrate that there was a technical glitch.
So the assessee in nutshell should be able to justify that there actually was a technical glitch. And
yes.
Okay. One more question. If there is delay on account of non-obtaining allotment of registration number, तो then will it be disallowed?
Again, ये delay क्यों है, किसके साइड से है, क्या एविडेंसेस है उसके, क्या जस्टिफिकेशन है. Typically, I have seen now PF and ESIC number जो employees के होते हैं, those are linked to Aadhaar. Now Aadhaar का सब mismatch data और employees का account खुलता नहीं है, उसकी वजह से पेमेंट नहीं कर सकते. So one will have to be judicious, cautious, see the facts and decide whether how do you want to report these cases. But yeah, as I said, if you have a genuine case, if you have a genuine documentary evidence to justify, this can be fit case for fight again.
Fine, perfect. To clause 21, admissibility of certain deductions. Can you explain us about what is the TDS applicability on the year-end provisions?
Okay. This is again a fight between accounting and taxation. Typically, what happens is while you are finalizing the accounts, you would know, you said you are a statutory auditor, you would be pushing your clients to make a lot of provisions to make sure that your true and fairness is coming. Now, what happens is in case of those provisions, there is a possibility that you may not know who the vendor is, to whom are you going to make the payments. In such case, what do you do? Because the way section is worded here, it says credit or paid, credit by whatever name called, even in suspense account, you have to still deduct TDS and make the remittance. And probably this is the reason this question has come.
Right.
So, in terms of legality, yes, if your vendor is known, It is just that you don't know the right estimate of amount. You don't know whether you will be paying 90 or 100, but you know you are going to pay to Yogesh. Then my answer is, even if it is provision, the TDS will be applicable and you have to deduct TDS based on whatever estimates you have made for your books of account. But in a situation where you don't know the vendor itself from whom you have to obtain the services, then you have a fit case that you may avoid this. But for all practical purpose, I don't know under which situation this situation will arise where you don't know the vendor and you are making provision. Definitely you would know the vendors in most of the cases because you would have issued POs, you would have issued sales orders for services. So you would definitely know which vendors you are supposed to pay. एक exception मेरे को दिखता है, and those exceptions are we auditors, because there is a possibility that as on the date of March, you may not have appointed some auditor. Statutory yes, tax auditor probably no, GST auditor probably no. So under such situation, I don't know what will you do as a chat auditor. Would you ask me to NSSC to make the provision for tax audit fees?
It should, I mean. See, creating provision, I feel is always better. I would tell my client to make provision.
No, why would you ask a client to make provision? I'm
True
saying,
and fair.
as an SSA, I'm arguing with you that services are not rendered, services are not taken. I don't know whom to pay.
Exactly, they don't know who they are going to pay, but they do know that tax audit is going to happen and they are going to pay. So yeah, like you correctly said, there is.
So under such situations, there will be a challenge. But
Right.
Otherwise, in general, you will have to make, even those are year-end provisions, then the invoices have not been received. I think the idea here was that if invoices are not received and only provisions are made, then what do you do? Yes, you should make the TDS provisions.
Correct. Okay.
Just to interrupt, connecting that to MSME 43BH, how would you treat? So will that be your disallowance under 43BH or
Yes, it will be.
it will be?
I think let's come to MSME question specifically. There are some
Next part is
questions.
MSME.
There are some questions that I expect a lot of other questions on MSME. I think let's take up MSME separately. Yeah, I think
Now we are
can come on
coming to
MSME.
MSME.
I think before we come on MSME, quickly finish this Ind AS things.
Okay. We'll take questions on Ind AS first.
I'm not sure how many participants would be interacting on Ind AS, but yeah, let's quickly finish this.
Okay, we do have 4 questions on Ind AS. The first one being, should the deduction of interest charged to the statement of P&L due to the effective interest rate method of Ind AS, would that be allowed under Income Tax Act?
Okay. To summarize this very quickly, just would cover. I think I will cover up all the questions within this one response.
Okay.
See, Ind AS is actually very different animal than income tax than AS. The accounting is very different when it comes to accounting standard and income tax. When it comes to income, when I'm advising somebody in Ind AS, I would not keep income tax in mind, and while I'm advising somebody in income tax, I will forget Ind AS. कैसा होता है? So under Ind AS, there are high possibilities that a particular transaction would have been recorded into 2 parts. Quickly, I will give 2 examples. One, in case of purchases, now there is a possibility that मैंने purchase किया है, but उसमें time value का money है, meaning मेरे vendor ने मेरे को extended credit period दिया है. So though purchase value is 100, but for all practical purpose, for my books of accounts, purchase is not 100. Purchase is 98, 2 is interest element. तो मैं मेरे परचेज में रिकॉर्ड करता हूं 98 और 2 करता हूं इंटरेस्ट में. तो 2 चैलेंज. एक तो जब ये कंफर्मेशन की बारी आती है तो मेरे बुक्स में वेंडर का परचेज 98 है, बट उसके बुक्स में सेल 100 है. ऑफ कोर्स 100 मेरे बुक्स में वेंडर के अकाउंट में है, बट परचेज सेल मैच नहीं होएगा डायरेक्टली. उसका सेल मेरा परचेज जरूरी नहीं है. मैं बैंक से बोरोइंग करता हूं तो मैं लोन लेता हूं ₹1,00,000 की. बैंक में से अपफ्रंट चार्जेस ले लेता है 10,000 रुपया एज प्रोसेसिंग फीस. Ind AS में मेरा लोन 90,000 का है, ₹1,00,000 का नहीं है. अंडर कॉमन सर्कमस्टेंसेस AS में लोन ₹1,00,000 का है, 10,000 रुपया एक्सपेंस है, बट Ind AS में लोन इटसेल्फ इज 90,000 बिकॉज दैट इज व्हाट आई हैव रियलाइज्ड. तो उसका जो 10,000 का मेरा अकाउंटिंग होता है, इट गेट्स स्प्रेड इनटू वेरियस ईयर्स. सो मतलब ये है इसका कि अकाउंटिंग फॉर IT and accounting for Ind AS is very different. When you are reporting for tax audit purpose or for your computation purpose, you will have to ignore all the adjustments which you would have done for Ind AS and assume that if this was not Ind AS and if this was normal income tax, how would have you accounted it, and give the effect to those transactions accordingly in your computation. Now coming to this EIR, I did discuss, so 10,000 रुपया will be adjusted in EIR in case of loan transaction. तो मेरे बुक्स में इंटरेस्ट लाख रुपए पे 10% का जो लोन वाला था, तो मैंने बैंक को पे किया है 10,000 रुपया, तो टिपिकली इंटरेस्ट 10,000 आना चाहिए था, बट बिकॉज ऑफ दिस EIR मेरे बुक्स में इंटरेस्ट 11,000 आता है फाइनेंशियल्स में. तो व्हेन आई स्टार्ट विद माय कंप्यूटेशन प्रॉफिट एज पर P&L, ऐड 11,000 लेस 10,000, और ये रिपोर्टिंग मेरे 3CD में भी जाएगा इन द पैराग्राफ व्हिच इज आस्किंग अबाउट ICDS के एडजस्टमेंट. तो इस ICDS और इंडियस का रिकंसिलिएशन बनेगा और यहाँ पे रिपोर्ट रहेगा. So yes, there will be an adjustment on this account. Similarly, coming to next question, I'll take fourth one first, which is talking of actuarial gain loss. So actuarial gain loss Ind AS में दो तरह से record होता है. So actual gain loss is on provision of gratuity. Typically मेरा gratuity expense सीधा PL में charge होता है under non Ind AS scenario. In Ind AS scenario वो 100 का split होता है 90 और 10, 90 in PNL, 10 in OCI. तो यस, मेरे को उसका 10 का भी बेनिफिट, ये क्वेश्चन है कि वेदर वो 10 का बेनिफिट लेना है कि नहीं लेना है, तो यस 10 का बेनिफिट भी लेना है. When it comes to ratios, it only talks about ratios as per books. So Ind AS, yes, whatever you are following, you use only those numbers for the calculation of ratios. And whether it is change of method of accounting, yes, we did discuss that following Ind AS from your IGAP, it is not a change in method of accounting. Method of accounting is cash or mercantile. This is a different accounting framework. Accounting standard is one framework, accounting Ind AS is another framework. So ये framework change is not changing method of accounting, so this will not get reported.
I remember seeing this question a lot in finals MCQs.
Okay.
Change in FIFO method is what? Change in policies or change
Yeah,
in...
so that's the reason one has to be very careful, because method of accounting कुछ और है, change in policies or change in estimates कुछ और.
Yeah, three totally different things.
Yeah.
Okay. Now shall we go
So
to
we go on to the MSME.
Okay. Okay, so how does the auditor need to report the interest inadmissible under section 23 of MSME Act 2006?
So as we discussed during clause 22, simply interest का figure report करना है, उसमें और कोई जगह नहीं है. I did discuss कि interest provision नहीं करते हैं या pay नहीं करते हैं, तो क्या consequences है, whether your qualification, whether your audit report will need a qualification, not qualification, one will have to decide. But if it is paid and if it is provided, then this will get reported in clause 22 and this will get disallowed.
Okay. Coming to our next question. In case of assessee following cash accounting system, will there be any disallowance for the delay in payment of MSME?
Okay. So as we discussed cash accounting or mercantile system, ये जो provision और outstanding as on 31st March का बारी तभी आता है when somebody is following mercantile system of accounting. If somebody is following cash accounting system, तो P&L में अपने books में डालता ही तभी है जब उसको pay करता है. And what 43BH requires is the deduction as and when paid. So in case of SSEs who are following cash accounting system, this disallowance का issue आएगा ही नहीं, because उनके P&L में वो आएगा ही तब जब उन्होंने pay किया है.
Correct. Okay. Delayed payments to MSME for capital goods, will there be any disallowance for that?
Okay. So there is an MSME जिससे मैंने मेरा फिक्स एसेट परचेज खरीदा है, तो क्या वो एक्सपेंसेस डिसअलाउ होएगा? द आंसर इज नो, बिकॉज आई एम नॉट क्लेमिंग डिडक्शन ओनली एट ऑल. मैं डिसअलाउ क्या होएगा जिसका मैं डिडक्शन ले रहा हूं? मेरा डिडक्शन ही नहीं लिया है, मेरे फिक्स एसेट में बैठा है, तो वो डिसअलाउ होने का क्वेश्चन नहीं है. ऑफ कोर्स डिलेड पेमेंट के इंटरेस्ट कॉन्सिक्वेंसेज और जो रहेंगे वो रहेंगे, बट डिसअलाउंस नहीं होएगा. तो क्वेश्चन यहाँ पे और एक आगे है which is not asked, which I would like to add further, कि मैंने फिक्स एसेट खरीदा तो वो डिसअलाउ नहीं हुआ क्योंकि वो मेरे बैलेंस शीट में बैठा है, बट उस फिक्स एसेट पे मैंने डेप्रिसिएशन क्लेम किया है जो मेरे P&L में बैठा है, तो क्या उसका रिस्पेक्टिव डेप्रिसिएशन डिसअलाउ होगा? द आंसर इज नो, बिकॉज claiming depreciation is actually I'm not claiming the deduction. Depreciation at first place is mandatory. मैं claim करूँ कि ना करूँ, depreciation मिलेगा ही. So I am not claiming anything. It is not a deduction. Actually, it is an amortization. So it does not take the color of expenditure and then doing deduction of expenditure. Therefore, ये disallow नहीं होएगा. This is true for even one of the clause 40A3. जो हम कैश मोर देन 10,000 पे करते हैं तो वो एक्सपेंसेस डिसअलाउ होते हैं. तो उस केस में अगर जो फिक्स एसेट है तो डिसअलाउ नहीं होता है, तो क्या उसका डेप्रिसिएशन डिसअलाउ होता है? नहीं, उसका भी डेप्रिसिएशन डिसअलाउ नहीं होता है. द लॉजिक इज इट इज नॉट क्लेम, इट इज बाय डिफॉल्ट अलाउड एंड इट इज एन amortization, not a deduction.
Right, it's just a wear and tear.
Yes.
In case the amounts are all ready to be disallowed under section 40A and there is delayed payment to the said vendor, where should this amount be reported?
So the question here is like this कि एक वेंडर है, से मेरा सर्विस वेंडर है, एग्जाम्पल के तौर पे उस पे टीडीएस भी लगना था. नाउ सर्विस वेंडर मैंने एग्जाम्पल लिया है, माइंड यू, ओके दिस इज ओके, ट्रेडर नहीं है तो टीडीएस भी उस पे लगता है. अब उसका मैंने टीडीएस नहीं काटा है तो 40A1A में तो वो डिसअलाउ होना ही है अदरवाइज भी. तो ये एमएसएमई का टीडीएस भी नहीं काटा है और पेमेंट भी डिले किया है, तो क्या होता है? वेदर मेरे को इसको 40A1A में डिसअलाउ करने का, वेदर मेरे को इसको 43BH में डिसअलाउ करने का, वेदर दोनों जगह डिसअलाउ करने का. The answer is this will be disallowed only in 40A1A and not 43B. Why? Because when you look at the chronology of the sections, 40A1A is coming before 43B. So first 40A1A trigger हो जाता है, and the moment something is disallowed here, that cannot be disallowed again under 43B, and hence this will not be disallowed, and this will not be reported also under clause 22 if it is disallowed in clause 21 का 40A1A के disallowed.
Perfect. Last question. How to deal in case of builders if there is delayed in payment to MSME and the amounts are carried forward as a part of closing WIP, work in progress, and the expenses are not claimed during the year?
Okay. So this is a typical case of builders, assuming they are following completed contract method, they are not following POCM, they are not booking revenue. तो रेवेन्यू बुक नहीं करते हैं तो जो खर्चा करता हूँ वो क्या करता हूँ? मैंने लास्ट ईयर जो खर्चा किया था वो मेरा ओपनिंग डब्ल्यूआईपी में आता है, पीएनएल में, एक्सपेंसेस ड्यूरिंग द ईयर के पीएनएल में डेबिट होते हैं और क्लोजिंग डब्ल्यूआईपी बन जाता है. तो टिपिकली क्या होता है, आई एम नॉट क्लेमिंग दिस एक्सपेंसेस और वो मेरा डब्ल्यूआईपी में फ्लो हो जाता है, मेरा बैलेंस शीट में जाके बैठ जाता है. आई थिंक द क्वेश्चन इज इन सच केस व्हाट डू यू डू, वेदर, एंड दिस विल बी ट्रू अगेन फॉर 40A1A नॉन रिडक्शन ऑफ टीडीएस वाला भी. तो वैसे सिचुएशन में क्या होगा, इस whether this will be disallowed? The answer is yes, it will be disallowed. Now, though it is forming part of your opening or closing WIP, but this is getting through your PNL. You are first claiming that as your expenditure, and then you are carry forward things as a part of your PNL, as a WIP. So, yes, this will be disallowed. Now, somebody can argue अगर जो मैं ये WIP PNL से नहीं रूट करता था और मैं सिर्फ बैलेंस शीट में रिकॉर्ड करता तो क्या, PNL में तो कुछ नहीं आया है. That argument will still fail. Though since it is forming part of your WIP, this is the expenditure which you are going to claim, not today, maybe tomorrow against your revenue. This will have to be disallowed. हम इसका एग्जाम्पल लेते हैं TDS का, क्योंकि 43B MSME तो ठीक है, पेमेंट करोगे तो आप नेक्स्ट ईयर में उसको पेमेंट अलाउ हो जाएगा. अब चलो MSME का ही लेते हैं कि उसको आपने पेमेंट किया ही नहीं कभी भी, एंड इन year 5 you book the revenue. When you book the revenue, you adjust against your revenue your capital WIP. How much capital WIP benefit or reduction you will get against that revenue? Is it the whole amount which you are carrying in your books, or is it the amount which you are carrying in your books less the MSME vendors which are not paid, assuming they are not paid yours as on that day? The answer is the whole WIP less the MSME vendors which are not paid. तो आपको उतना ही बेनिफिट मिलेगा, अकॉर्डिंगली योर इनकम विल बी कंप्यूटेड एंड अकॉर्डिंगली यू विल पे इट. तो ये जो MSME को पे नहीं किया या जो TDS डिडक्ट नहीं किया वो आपका परमानेंट लॉस हो जाएगा. यू विल नॉट गेट द डिडक्शन एनी टाइम. In fact, sorry, before you have one question, I think one question is not asked which I would want to clarify on MSME, which I thought that must be there. There was a lot of discussion in terms of closing MSME. In fact, I don't know how many people of here were there in Mulund GP circle. Anybody attended that? Actually I gave the wrong answer. I want to rectify myself. As on 31st March, आपका MSME आउटस्टैंडिंग है. मैं बैलेंस शीट से 30th सितंबर को फाइनलाइज कर रहा हूँ. तो जो MSME मेरे को 31st मार्च को तो ड्यू नहीं था, 15 दिन या 45 डेज नहीं हुए थे उससे. Whether should I consider even those for my purpose of disallowance while I'm finalizing my accounts? The answer is yes. There I unfortunately mentioned no. I said as on 31st March, 15 days या 45 days खत्म नहीं हुए तो I will ignore them. But no, you'll have to disallow that. That is something which one have to kept in mind. One will have to keep in mind. Yeah. If the question was other than this, then now we can.
Yeah. So, to speak about the 5 years of 44.
44.
Yeah. So suppose I have a turnover of 2 crores. Last year the turnover limit was 2 crores. So if last year I have crossed 2 crores, so I have to get out from the 4480 anyhow because I have to audit. Yeah. But this year my turnover increased, 4480 turnover increased to 3 crore, depending on 95% of your digital transaction. So in that case, I can go again and 4480 because 5 years criteria was.
As I mentioned in that my discussion, that see opt out and not coming back in 5 years is of your act. If because of law, if law was mandating you to do for under 44 AD because of certain circumstances, then that will not be considered as opt out. You can come back again. So those exceptions where law has forced you to get the books of accounts audited because of certain provisions, those will not be considered as opt out.
Okay. So in that case,
You can come back again in 40.
Providing 95% of digital transaction.
Conditions apply. I'm saying in principally, voluntary what opt out hai, so you have a problem of 5 years. But because of law, you had to opt out, then it is not a opt out. That will be an exception.
लेकिन 2 शेयर के ऊपर गया तो फिर 45 में तो बैठते ही.
Conditions except apart. वो conditions देखने के लिए what we are discussing or debating is on whether आपने voluntary opt out किया है या law के वजह से आपको opt out है. So under such circumstances, it will not be considered as opt out.
I have two questions here. One is, if an RU, this is with regarding to lease company. So, since if an assessee has acquired some fixed asset under lease, or so he has to pay lease to MSME, but since he is not paying, so should I disallow that amount and claim less depreciation on it, or can I claim the whole depreciation on the part?
No. So again, little complex question in terms of what lease accounting you are following. Are you into Ind AS? Are you doing ROU?
ROU, yes.
So ROU तुम कर रहे हो, so as I said in my Ind AS का thing, first of all you will have to undo everything as you have done for all Ind AS. So what will happen is when I start with my profit and loss account, I'll add back interest on finance lease. I'll add back ROU का depreciation. I will add back amortization. वो ये add back करूँगा. And typically मैं less क्या करता हूँ जो actual rent मैंने pay किया है. So now assuming if this was your MSME vendor and you have not paid him in time, then you will not get the deduction. तो ये addition तो सारे हो जाएंगे, but deduction नहीं. So indirect आपका addition होगी.
There's one more question. This is with regarding items forming part of payment. So can we consider only those items where the order has been passed? So your my question is suppose during the year when I have to file my tax audit report and I am under an assessment procedure. So my order has not been passed yet, but I am of the opinion that I may have to pay that tax liability on the additional income that the assessing officer will add. So should I add this or should I wait for the order?
So I think before tax audit, I will jump onto the accounting. That whether you are saying is this a contingent liability or is this a crystallized liability? Now, if you feel yourself,
I feel there's a chance that there's a more than 50% chance that I have to.
Then you will make the provision.
I'll make the
The moment you have made the provision, this is part of your P&L. then the question of reporting not in P&L का आएगा ही नहीं. Then you are out.
But
Nonetheless,
I am not sure of the amount. Then.
so you are estimating. See, again, when you are closing your books of account, you are doing some estimates of amount. I think that should be reported. That much should be.
That should be reported.
But the moment they are accounting, I think फिर कोई reporting नहीं आएगा. But nonetheless, this issue will not come because this is income tax, and this will be taken care in your 40A1A one paragraph, and not here, and not under this paragraph.
So if I'm of the opinion that addition will not come, then do I need to add this?
No, because you will not treat this as your contingent liability as well. Then no.
But if I go to appeal, then the form part of reporting.
See, again, your whole assessment will be based on whether how I treating this as a contingent. But I am saying we are discussing on a topic which is related to income tax.
Income tax.
All the provisions or all the expenses related to income tax provision. The moment it is income tax provision, this is not part of this P&L. वो ऊपर वाले 21 clause में है, उसमें cover हो जाए. Disallowance under 40A1A or 1(2), I don't remember the exact section number. वो उसमें cover हो जाए.
But other than income tax, suppose it is a legal case,
Then proceed.
But if I go under an appeal, then you have to add it here.
You have gone into appeal again. Whether what treatment have you given in your books of accounts, whether you have provided or not provided, it will all depend on whether you have provided or not.
If I have provided,
Then there is no question whether it is already forming part of your P&L. The question here only will come if you have not provided. Then probably yes, we need to analyze on a factual basis. Limited facts पे yes बोल रहा हूँ, but actual क्या transaction है, one need to analyze.
And there's one more query. So, if your statutory requirement for your related party reporting, if the statutory requirement says a point, your 15 CCB the tax reporting says another thing. So, which one should be?
Come back again, sir. Come back again.
I'll reframe my.
Yeah, please.
So, I'll take an example of banks. So banks are usually required to report their related parties. So related parties or banks are only their CEOs and the managing director. That's it. Others are none of the others are related. But Income Tax Act says otherwise. It allows the other parties, for example, the director, the CFO as well. So should income tax prevail over this, or should we prefer bank?
Both are independent. Both are independent. Definition of related party at each places it is different. Companies Act it is different. AS it is different. Ind AS it is different. Income tax it is different. Now, when you are reporting under tax audit clauses under 48(2)(b), you will only and only restrict to the related party transactions which are defined under Income Tax Act. That's what I said when I was talking on those paragraphs. Okay, there is a possibility that your AS reporting or Ind AS reporting will have a long list. Not necessarily everything will come here. What I mentioned was you have to keep a tab or a watch कि हाँ कुछ miss नहीं हो जा रहा है ना उसके लिए. This will help you in giving a watch, but replication नहीं होएगा. I can share one example on AS or Ind AS related party. काफी लोग मिस कर जाते हैं ये. मैंने अपनी सब्सिडरी को रेंट फ्री जगह दी है भाड़े पे, मतलब भाड़े पे क्या दिया, मतलब रेंट फ्री वो मेरे जगह पे बैठा है. Is this a reportable transaction under Ind AS or AS or Income Tax Act? Monetary consideration कुछ नहीं है. Is this a reportable transaction? Statutory audit करते हो आप?
Under income tax, the wordings are payment. So there is no payment.
Income tax, yes. What about accounting standards?
It is reported.
It is reportable.
Yes, I think.
People are missing. See, standard क्या बोल रहा है? Related party transactions. Now this is a transaction, monetary or non-monetary. It is a transaction. We give by way of note that ABC Holding has given rent-free accommodation, words, छोड़ दो, but rent-free premise to XYZ, which is subsidiary. We give this reporting. I have not seen this reporting in many big balance sheets.
So what people tend to do in income tax is, even though the wordings are payments, they still report on loans, receipts also.
Those are not right. That is not right. That
Still
is not right. You have to refrain yourself to only expenses. Because when you read section 48 to be a starting opening, it talks of expenses.
expense, not in pay.
It talks of expenses. So you have to restrict yourself to that.
That is online.
Any questions online?
I don't think any question have been asked.
Is there anyone who wants to ask any question? Okay, there are few questions.
So, what if FNO business has turnover of 1 lakh
But has losses.
but has losses? So, I believe this is asked from a perspective of 44 AD या किस context में? So, turnover के concept में बात करूँ तो losses है तो yes, losses will be considered as a part of calculation of turnover. आपको absolute minus sign निकाल के absolute figure करना पड़ेगा. But when it comes to applicability of 44 AD, as we said, losses or minimum amount taxable chargeable limit में नहीं है तो it will not be applicable.
But बाकी कुछ अगर income है,
नहीं. So I'm assuming only this is the
हाँ,
case. I'm assuming
बाकी
only
income है,
this is the
salary
case. And which
income
is
है.
exceeding maximum amount chargeable to tax, then probably the answer is different.
Correct.
Then probably the answer is different.
Maybe she asking the audit is applicable, or should she just put in books?
I think I've answered this. Presentation. I think वो जो opening जो उसमें questions answers में जो आए थे वो I think I'm all covered. जरा आप देख लो.
I still check online. They have posted anything else. This is message.
Okay. So the first question was, tax audit has been undergoing many changes for past few years. What other charges have the institute changes? Have the CA Institute or the tax authorities have suggested which could be considered by government? I don't think any specific changes in charges. What other charges?
No changes or challenges.
It has to be read as changes. Anand.
So even if it is changes तो जो I mean सारा cover किया हमने इसमें changes. I think way forward क्या आएगा तो I think recently भी हमने सबने न्यूज़पेपर में पढ़ा है कि 6 महीने में नया income tax act आएगा, which I don't know whether that is possible. What all precautions need to be taken for successful tax audit? Okay, good question. So typically what we do is, even though we are doing tax audit, we document everything the way we are doing tax audit. इतने हद तक कि as we say that tax audit form 3 is the responsibility of the management. So management would report something, or if we are not agreeing to that view, we put auditor's note under many of the paragraphs. So अगर जो मेरे ऑफिस का 3 देखोगे आप, so out of 44 clauses, at least 25 clause में you will see some or other comment. And if those are grave in the nature or those are qualification in the nature, then one should keep in mind that those have to be appropriately qualified in 3CA and 3CB as well.
So comments plus qualification.
Comments plus qualification is something which one should keep in mind. When I say comments, at least at 25 जगह पे, हर जगह पे we are trying to clarify our position. I will give couple of examples. Loans के case में it talks of account payee check. Now, how would I know under the world that the account payee checks are drawn or no? Unless SSC has kept the copy of check which is account payee mark. So we give disclaimers for those kind of things. In case of individuals, chapter 6A के deductions का clause है. Now SSC ने मुझसे disclose नहीं किया रहेगा कुछ चीजें. How can I certify what could be the chapter 6A का deductions of the SSC? We give a disclaimer. Brought forward losses. Income tax return SSC may not have shared with me. How will I certify those numbers? We give disclaimers. So at each of the paragraphs, wherever we may not have sufficient information or we may not be in agreement with the client at many places, we will give those kind of disclosures. So as I said, out of 44, at least 25 clauses में तो हमारा कुछ ना कुछ comment रहेगा ही रहेगा. Tax audit वाला clause 34. easy to say कि compilation of information है, but difficult to work. तो हम कैटेगरी के लिए लिखते हैं उसमें कि ये टेस्ट चेक पे है, वॉल्यूमिनस डेटा है, so on and so forth. So one has to be careful. Want to attain knowledge first. Okay. Full details for reporting 43B MSME clause. I think I've covered that.
Yes.
In case if something is unanswered, online, offline, I'll be happy to answer.
If there is anyone who wants to ask question.
I have an additional question. So you said that in case of reporting of additional income, so if there's an revenue inflow that I feel as I will be the case. So creating a provision for revenue, the accounting standard doesn't allow it. So what should I do? I cannot add it back.
Okay. Again, a fight between accounting and taxation. Probably your taxation may warrant such disclosures. Your accounting may not warrant, because you will have to see AS vis-a-vis ICDS. What is ICDS saying for such incomes? If ICDS is saying that those incomes will be taxable, then the answer will be yes. You will have to report or disclose.
Report and add back
Add back, I will not take that risk of adding back or giving or responding at this forum, because that will be the call of assessee. When it comes to for now, I will refrain myself only to the responsibility of tax auditor. I will report. Because AS says virtual certainty. If you have reasonable certainty of receiving the money, then only you book income. But ICDS may say something different. So if ICDS is saying something different, then reporting may.
But can I delay it until I receive the order rather than making a provision?
मुश्किल है, but facts to facts देखना पड़ेगा. मुश्किल.
Anyone else who wants to ask question?
Let's close on. You can take offline. फिर वो questions कुछ है किसी का.
So we'll take the vote of thanks. So first of all, good evening everyone. So we bring today's insightful seminar on navigating tax audit, deep dive into important clauses, insights and best practices to a close. I want to take a moment to express my heartfelt gratitude to our distinguished speakers who have truly made this session impactful and memorable. Firstly, a big thank you to CA Yogesh Amalji. With his vast experience as a fellow member of the Institute of Chartered Accountants of India, Yogesh ji has been a significant force in the auditing and financial advisory field since 2001. Currently, as a partner at GBCA Associates LLP, he has played a crucial role in leading their business support service and outsourced CFO practice. His extensive experience in managing audit for large corporates, including listed companies, multinational firms, and PSUs, has provided us with invaluable insights today. Yogesh ji took a complex topic like tax audit and broke it down into clear, practical steps, making it accessible for everyone. His expertise in Indian GAAP, Ind AS, and IFRS, along with his position as Vice Chairman of the Accounting and Auditing Committee at the Chamber of Tax Consultants, was evident in his presentation. For those who have further questions or need guidance, may feel free to approach him. Reach out to him at yogesh@gbcaindia.com. I would also like to extend my sincere thanks to our moderator, CA Urmi Joshar, who brought her sharp insights and professional expertise to guide today's discussion. Currently, as an associate manager at Deloitte, CA Urmi has built a strong foundation in tax and audit through her expertise at Deloitte, Jakhotia and Associates, and Vayane and Associates. With her in-depth knowledge of corporate law, tax implications, and hands-on experience in income tax, GST, and corporate setups, she added immense value to our session today. Her thoughtful questions and ability to simplify complex concepts ensured a comprehensive understanding of tax audits for all participants. The topic of tax audit is vital for financial compliance, requiring both precision and a deep understanding of tax laws. Today, thanks to our speakers who have equipped us with a clear perspective and actionable insight on how to manage these challenges more effectively, I am confident that everyone here present virtually as well as over Zoom, over YouTube Live is leaving with not just notes but a deeper understanding and a renewed clarity. As a token of appreciation, we would like to present both CA Yogesh Amal and CA Urmi Joishar with a Tulsi plant pot as a memento. Tulsi plant is not just a symbol of health and purity, but also a representation of growth and prosperity, much like the knowledge you both have shared with us today. May this small gesture serve as a reminder of how much we value your time and insights. Once again, thank you CA Yogesh Amal ji and CA Urmi Joishar for your valuable contributions that have greatly impacted us all today. A special thanks to our attentive audience for your participation and insightful questions. Let's continue this journey of learning and growth together. Thank you all, and you have a wonderful evening ahead.